Hi everyone, I'm Ken from CryptoTradingKS and the inventor of the CTKS Method and BORSOG trading. If you're new, welcome. And welcome back, KS family. Let's run the numbers. Bitcoin is currently down 1.93% to 23,371. Ethereum is down 1.87% to 1835. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. Looking towards the greatest gainers and greatest losers, we can see global crypto market cap decrease 0.08% over the last day and is currently at 1.15 trillion. The greatest gainers, EOS up nearly 12%, Doge a little over 8.2%, Anchor 9.23%, Chili's 6.09%, and Tezos 5.2% up. The greatest losers, Celsius down nearly 12%, CVX down 6.2%, LDO down 4%, Rose 3.8% down, and Leo 3.21% down. When we met up yesterday, Bitcoin was trading at 23,880. Now, what did we notice from that point? We said that there were support lines about 1% below, 2.94% below, and 4.61% below. We basically sold off to this 2.94% below support level at 23,171. Bitcoin is currently trading at 23,356. We always have our ANF strategy playing out. That is, we know we control the trade, but the market controls the return. So we have to respect the market. We first do our three-dimensional decision making on what happens if our trade goes against us, goes nowhere, or finally goes for us. Active learning is a really important thing to do, and I want to thank all the kind global family members that reached out and gave their interpretation as to where Bitcoin could go. And we look at Bitcoin because we know no alt can escape Bitcoin's gravity. So this active learning will make you better and better at placing your trades. And we know all investors become traders anytime they buy or sell. So what happened inside the market? What we saw, the S&P came down, the Dow, the Nasdaq, the Russell 2000, oil came down, silver came down, gold just went up a little bit. 10-year yield went up 2.44% and Bitcoin came down. What is this in relationship to? Well, it's mainly in relationship to the fact that global markets are really quite extended at the moment. They're actually due for a pullback. And we can see the S&P 500 is getting up to its resistance line. It's currently 1.67% away from it. We also had the FOMC July minutes out. The FOMC, or the Federal Open Market Committee, is the policy arm of the Federal Reserve tasked with regulating monetary policy. It has two dual mandates. It needs to rein in prices and ensure full employment, so that's good to keep in mind. And the FOMC July minutes came out before the decelerated CPI and the strong jobs report. From the minutes, there's a thing called Fed speak where they don't really tell the market too much about what they're going to do because they don't want to freak the market out. They basically said that they will just take any action that is required by saying rate hikes will be contingent on market conditions. And in LV20 Masterclass students, you'll get this live chart. What we see here is the US interest rates. We can see it's currently at 2.5%. A lot of people say, okay, when interest rates go up, things have to come down, but that's not always the case. We saw with Bitcoin, as interest rates were increasing, Bitcoin was going up. This included the period from 2015 to 2017, and then interest rates kept on going up and Bitcoin retraced. And then interest rates were flat after C19 and Bitcoin was pumping, and of course no alt can escape Bitcoin's gravity, so the alts were partying. Two other economic releases happened in the past 24 hours. Core retail sales month over month was above expectations, and retail sales month over month was below or under expectations. Something noteworthy: the probability of a 50 basis point increase in the federal funds rate was yesterday 59.5%. Today it's 64.5%. This is generally really good for the markets. Now let's do some magic together. Let me move all of these lines around. We can see this is our now approximate level, and of course Bitcoin is a bit of an animal. It's always up and down. We can see we're about 0.61% away from the next support level, which is 23,171, about 2.3% away from the lower level of 22,782, and the lower level below that, the third level of support, is 21,977, about 5.73% above. We've got about 1.4% to go to the next resistance level at 23,642, about 2.98%, or say 3% away from the resistance level above that at 24,011, and 5.37% to go to the 24,576 level. You can see that we're quite close to the red area. If we get into this red area, we must assume that price can move against us. The crypto market is intensely psychological, so we need to prime our minds for profitability, and we do that through a series of affirmations called the CTKS Creed. I know the universe wants me to succeed. Every day I show kindness, integrity, and gratitude. I know opportunities and life reset daily. I am worthy. I go slow to go fast. I start small and scale with BORSOG. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. It's really helpful to look at the longs and the shorts. For example, when the shorts pile into the market, as they're doing right now, and they've done many times before, that is typically accompanied by a decrease in prices. But if the longs come in and liquidate the shorts, it causes a short squeeze. And basically the short sellers have to cover their positions, and in doing so, they have to buy. And that causes price to spike up like this. You can see where short squeezes occur, and generally these institutional candles. So what do we actually notice about the shorts and the longs right now? The shorts are spiking up. They're getting more and more confident that prices will go down. And we can also see the longs coming out of the market. This is really good to note, because when the longs start to curve around, they put pressure, buying pressure, onto the shorts, and that can liquidate the short positions and cause a short spike. Over the past 24 hours, there's been about 240 million in total liquidations across 84,030 positions. And when we look at the total liquidations for the past 24 hours, 69% have been long. Over the past 12 hours, 85% approximately long. Over the past 4 hours, about 83% long. And the past hour, about 78% long. It's always good to keep your mind on how the shorts and the longs are liquidating each other over those variety of different time periods. That can indicate an incoming short spike or long spike, one that goes the other way. And when we look at total liquidations, we can see the longs have been liquidated quite substantially compared to the shorts. And that was the same yesterday and the day before as well. And what we're seeing is a bit of a turnaround in price, with the longs getting liquidated and the shorts making money. There was a comment in yesterday's video, is it safe to get back into USDT? And in TM14, inside the Masterclass, I talk a lot about stablecoins. What you've seen recently, because of the DeFi attacks and all the problems that happened with DeFi, a lot of money came out of the crypto market. We can see USDT had a massive decline when that happened. And what we saw also were some newspaper articles, some media articles, questioning whether if Tether was actually backed or not, and this has been going on for as long as Tether has been around realistically. What we do notice, as Tether was sailing off a cliff in terms of its market capitalization, we witnessed a near 21% decrease in Tether's market capitalization, literally around $17.5 billion. That was a substantial decrease for Tether. And over the same time period, we saw demand for USDC, or funds flowing into USDC, increase by $6.36 billion, or around 13%. We saw over the same time period funds flowing into BUSD and also into the DAI stablecoin. What it actually shows me when I look at these charts, when we had Tether being questioned and the DeFi meltdown as well, a lot of funds were actually transferred out of Tether into USDC. You can see that spike here, and also BUSD, and to a minor degree DAI as a stablecoin. We've seen recently that about nearly $2 billion has gone into Tether. You could say that this shows that the market participants are warming up to the idea that Tether is now stable again. I still hold the preference for USDC and BUSD. Rule 774, master yourself to master the market. Positive excellence is a beautiful way to live life, and also a way to take so much stress and pressure off yourself. All of these green boxes are real wealth foundations, positive excellence foundations. When you have integrity, you're one person behind other people's backs. You don't change your tune. When you're decent, you actually guard other people. You contextualize your actions and others' actions, and just say what is the right thing to do. If we had more decency and integrity in the crypto market, there wouldn't have been as many crypto failures. A lack of integrity and decency costs people money. And we can see when the markets are kind of red like this, persistence and commitment are really, really important. Having inner and outer peace is absolutely vital to decrease the stress in your life. If you look at the market and it's red like this, how do you feel? Do you feel a sense of inner peace or outer peace, or do you feel something else? Please let me know in the comments. We know as a global family that money follows good foundations and a strong character. There's a lot of people who can make money quickly, but it goes just as fast. That's why we don't gamble, we don't get into conflict with other people, we treat people with respect. There's a lot of people that don't realize that they're not treating others with respect until those people start to shy away from them. Having respect for others is a very, very powerful way to create more meaning in life. The reason that so few people are consistently profitable in trading and investing is that they inhabit Zone 1 and Zone 2. Even inside Zone 3, where you have patience and rules. Markets always tend to humble us all, and when they do, that's just part and parcel of trading and investing. There was a story about Jesse Livermore, the developer and inventor of day trading. Jesse Livermore didn't feel real wealth and positive excellence in his life, and he unfortunately took his own life. He's held up as a mentor and someone to be like. I don't think so, personally. Jesse was certainly a brilliant man, but in his suicide, he actually created intergenerational problems. Both his sons committed suicide as well. And at one stage, Jesse Livermore was amongst the richest people on the planet. Money doesn't solve problems. If Jesse managed to get into Zone 4, mastering of fear and worthiness and meaning, he wouldn't have taken his own life, and his intergenerational legacy would have been very, very positive. This is why I spend a lot of time on positive excellence and talking about it. It's incredibly important. What is the point of becoming really, really wealthy and really, really unhappy in the process? Why can't you be happy along the process of getting really wealthy, and not to have your wealth go up and down, but just to build slowly? That is the way. Because if you think about life, we're all after happiness, gratitude, fulfillment, and meaning. Positive excellence is the way to get there. Can you please let me know in the comments, how has positive excellence impacted your life? I would really love to know. As a global family, we're all about synchronizing in with the market and then scaling. If we find we're not keeping synchronization, we are desynchronizing. We descale then. Start with very small position sizes. I suggest just coffee money. 1, 2, 5, 10, whatever it is, just keep it small to get into synchronization. And when you're synchronized with the market, you can scale up, you can hit it hard, but only if you're synchronized. If you're out of synchronization, you'll just lose money. So it's important to put money on the line when you're trading. But when you're just learning, don't put too much out, just put coffee money out. I just thought it would be interesting to talk to you about Ethereum. Let's see what I see when I look at Ethereum. I see this, for example, a resistance line coming through here, and you might say, Ken, why didn't you draw to the tips or to the top of the candle or things like that? We're on a 1 hour time frame. 1 hour time frames are very, very volatile. And you know, on higher time frames, we have very, very specific ways under the CTKS method to do things. But what we're doing on the lower time frame is understanding how price is reacting on average. It's like an on average variability around a mean, literally kind of like a standard deviation measure. And you're trying to figure out when things get broken to the downside and to the upside. We can see with Ethereum around here, when it broke out, it didn't maintain it, it sold off. Tried to break out, didn't maintain it, sold off. We could of course draw trend lines up there, but they're not very responsive. We want fast signal trend lines. This is a fast signal trend line, and this one is as well. And when we look at the current price, which has been moving around since I actually drew this in, good old Ethereum, what we actually see, there's a major structural level of resistance at 2043. We're about 11.25% away from that at the current price. There's also another structural level at around 4.2% below where we're at right now. But the probability of this one holding, if you went down just a little bit more to this one around 1697, you'd be better off. You can actually be on the wrong side of the trade, but on the right side of the percentage and make returns. And a lot of people don't realize this, and this is something where trading just excels. For example, if you placed an order around, and I'm not suggesting you do this, is you have to make your own decisions. But if we look at this very, very tight trend line just coming down, and we were placing an order at around the 1697, when it gets filled, you could place a sell order at around 1806, and there would be a reasonable percentage probability that that percentage could fill itself. And 6.4% is nothing to sneeze at, especially if we get these spikes that go up rather quickly. That's why we don't want to draw the trend line to the spikes, because an on average variability has been exceeded with these spikes. We want to normalize the price action. And one thing we do notice, because we're under this particular once support, now resistance, and you can see how price came in to test and to break above that resistance. And what did the sellers do? They just squashed it down. So we can see we're under resistance. It's retested resistance. That would push the probabilities towards more negative momentum. So these are things that you need to keep in mind. That doesn't mean it's absolutely guaranteed to go down. This is just probability, and probability is what traders and investors use to become professionals. For example, if we held the assertion the price was coming down on ETH, this would be our for us proposition under ANF. We would expect to, for example, place an order, for example, around the 1697 mark, or potentially even lower around this 1629% mark. And why do we do that? Because we know that we can be on the wrong side of the trade, but on the right side of the percentage and do very, very well. And one thing to bear in mind, the stronger the resistance, the stronger the support here, the better you are, the safer you are, and also the more percentage return that you make when prices recover. Price is always moving in a wave. On the short term, this is just the 1 hour, but it's always going up and down and up and down, and it does all sorts of weird and wonderful things. You can take advantage of that. But what happens if it was to go the other way and just slice through this now resistance line and this resistance line? When you get a crossover of, for example, price pulling up this way, crossing over, maybe even coming back and retesting, and then resuming off, that's quite good. You have to be aware of these false breakouts. That's why we push our particular resistance line down so that we have a very, very fast signal line. Professional traders and investors know that if you have something at 10, you buy something, crypto at $10 and it falls to $5, that's a 50% return. But it goes from $5 back up to $10, that's a 100% increase. We're always looking for negatively biased buy positions. That is what actually makes you the money. A lot of people think that the market has to go up and up and up, and this is the way to trade. Unfortunately, it's not the way to trade. You actually want to look for these pullbacks, and if you get a change in trend, you have to be really mindful of that as well, because it just creates more and more opportunities, not less. For example, I love to play this little cartoon. This is retail. We're not retail, we're smart money. Retail gets extremely happy as prices are going up, and then what happens? The inevitable happens. Price moves in a wave. It crashes. This is a tsunami. And what does retail do? They run for the hills. They go up the wall. And this is not the way of smart money. Smart money is already on the floor, invisible smart money, and it's bidding up the price to pull retail back. That's why we must synchronize with smart money, not retail. And look at the price, it's going up. How can it? It's not driven by retail, it's driven by smart money. And retail comes back into the market, buying now on the way up, and typically buys around the top and then it retraces. This is why, and you can see there's nobody on the dance floor. The best songs play when there's no one on the dance floor. It's all about synchronization with the market. Just use really, really small position sizes to get yourself in synchronization. And when you've got the music in synchronization, the market music, you can hit it, and you can hit it really hard. But just take your time. There's no rush. Inside the masterclass, we do deep dives on the CTKS method, which is an upgrade to normal candlestick pattern analysis, and it actually shows you so many vital things to learn. We can see this very tight and very rapid signal line here. And what happened? We're currently underneath that. We could draw another one, just basing it in from this behavior to this behavior. This is actually pointing to a 1697 level if we continue to sell off, and it would be quite reasonable to do so. We can actually get an over-exaggeration of negative moves as well. This is our for us situation, which sounds kind of weird, but we're just trying to get on the right side of the market, on the right side of the percentage. And when you look at it, we can't only have this way of thinking. We need to do three-dimensional decision making. If it goes against us, in this case, it would go up. And if it goes nowhere, it would just consolidate along this particular line. That's why we have these support and resistance lines playing in. They actually provide the lines, the guide rails, to understand price potential and price behavior. Please let me know in the comments, what top crypto would you like me to do this kind of analysis to tomorrow? Please let me know in the comments. I've left helpful links in the description of this video, such as the CryptoTradingKS Masterclass. The CryptoTradingKS Masterclass is a premium Rolls-Royce level masterclass on crypto technical analysis, and it uses a method that I invented specifically for crypto technical analysis, which is called the CTKS Method. If you're keen on learning crypto technical analysis, which will make you a much better investor, because we know all investors become traders anytime they buy or sell, please look for the partial scholarship link. I'll be announcing the scholarship winner in the next couple of weeks, so please make sure your entry is in. That is your application. And if you come across to the testimonials section, you'll see a video of why I actually created the masterclass. It's all about transferring knowledge, and there's quite a few testimonials down here. I won't bother reading any of them out, but you can see what other people have said about the CryptoTradingKS Masterclass. Hopefully, when you look at the market and it's red like this, you're not panicking at all. You're actually seeking to get onto the dance floor, but be careful how you get on. You want to have a confirmed trend change. That basically means you want to make sure that you're not just throwing money into the market. If you are, just use coffee money until you have confirmation that the trade is going in your direction. And a very warm welcome back to Art. And to J-Link, very well done, my friend. You picked out a hidden gem. I'll explain that tomorrow. And for Tails, it's really funny. Thanks so much, Ken. I've been trying to sing along with one over and over again, but we can't synchronize, even though it's called Harmony. Brilliant, Tails. And for Mellow Cryptic, it is no problem to chill out and sit on the sidelines at any time. Please do not feel any pressure to be always in the market. You don't have to feel like that. You just wait for the market's natural synchronization to synchronize with you. Well done, Mellow Cryptic. Please consider sharing and liking this video, and also subscribing to the channel. We would love to have you as a part of our globally extended KS family. Thank you very much to our moderators for keeping our community safe from scammers, and to the CTKS ambassadors for assisting masterclass students. And of course, a very big thank you to you for watching and for being part of our global family. I've left helpful links in the description of this video, such as the tax software I use and the CryptoTradingKS Masterclass. Please seek out an ambassador to get 80% off using the links in the description, and if you're in financial hardship, you can also apply for the partial scholarship. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care, and see you next time. Bye for now.